everything peaked their head up right on the Sunday opening. Euro was slightly higher. Aussie was higher. Kiwis was higher. Canada was higher. And they really came to town on Kiwi and not Kiwi, but on sterling and euro. Euro comfortably below 102. Sterling really hit hard. Interesting. UK rates are at multi-cycle highs right now. French rates, interest rates, are higher than Greek rates. And they used to always talk about the pigs. Remember Greece and Portugal, Italy, and their rates skyrocketing at some point versus the core European rates. We're seeing just the opposite now. So UK rates at multi-cycle highs, French rates high. U.S. rates, bonds traded lower last night. Notes in 2 years really getting hit in the morning too. So U.S. rates higher again. U.S. stocks tried it higher and then just kind of collapsed to lows right now. We're seeing a little bit of bottoming. Crypto off $5,000. Bitcoin traded a little bit higher Sunday night, 96.5, and we're down below sub 91,000. So there's a lot going on. It's interesting to see UK rates higher, but the currency just getting slammed. U.S. rates higher, and the dollar just taking off. So two completely different stories if you're looking at the interest rate lever. And that's why it's one of a compendium of things.
Well, and it's funny because you and I talked about it. I mean, we've been talking about nonstop the last several weeks. The interest rate differential being a big part of the forex trade on the way down in interest rates. And of course, nothing is ever as simple as you think it's going to be or the way that you map it out in your head or in your platform in any given day, that it's like, oh, okay, well, if U.S. rates don't fall as fast as Canadian rates, then U.S. dollar will appreciate relative to Canadian dollar because there will be more demand for U.S. dollars at the higher interest rate. And that is the theoretical story and what played out for a big chunk of the end of 2024 there and the start of this year. But there is something brewing here that is very different than that story. Because, yeah, Pete, when you talk about interest rates moving higher in a region like the Euro area and the UK and their currency getting annihilated like it has been the last several trading days, that is more of an economic distress story. And this is what you can't plan for. You can't make an equation for. Like I say, when you and I are talking interest rates 2 weeks ago and the U.S. dollar is punishing all these commodity currencies because of that interest rate differential. And just really quick, I'll go to this dollar CAD. Remember, amid all of this, this is all the U.S. is not going to cut as much, and Canada was cutting, 50, 75 bips at a time to get their interest rates lower because their unemployment has been so high. And interestingly enough, Canadian unemployment was actually not as high as it was expected last week. The Canadian dollar, it's not in a good position, Pete, but it's not falling as much as some of these other currencies. The story is completely changed here, and maybe you can give us a little bit of the nuance, because honestly, this is one of those things that is really hard to quantify. It's hard to describe, whereby you have UK rates, French rates, different Euro area rates that are climbing as their currency is getting killed. And I'll go back to the daily chart. But, what is going on here from what you can see? Because this is a straight shot from 125 down to now testing 121 in 5 trading days.
Yeah, which is a huge move. That's 4% in a week. That's a huge move. And, you'd hear about a 5% devaluation in like a frontier currency, South American currency. It's like, oh, it's a big devaluation. Well, they basically devalued the currency here 4% in 5 days. So, the market is priced in the idea that the central bank will tolerate, and they may want a lower currency as a way to stimulate activity there. So there's some concerns about where the budget is and whether or not they're going to meet their budget goals with the new Labor government. And I think that uncertainty is playing through directly that stress. I think you make a good point. the U.S. economy is still relatively robust. We had a huge unemployment number. Now they're talking about, really dialing back rate cuts in 2025. So our higher rates are driven by a different animal than what's driving UK, which is concerned about contraction, slowdown, and the inability for the government to be able to borrow at sustainable rates. So it's interesting. Both cause higher rates, but the drivers of those give you two very different outcomes. One is a relatively outperforming currency like the US dollar, or underperforming one like sterling. So we look at rates not in a vacuum, but what is driving the rate behavior and how does that play into the two pairs. So you've got US dollar being driven by higher rates. You've got the sterling being affected by higher rates as a drag on economic performance. So you've got to kind of balance out the storyline, and also don't get too caught up in that. Don't get caught up in the fog of that macro babble. It's good to know context. Context lets you form strategy and take advantage of opportunity. I mean, is this pound cheap? Absolutely. But the one thing from my time trading FX is when you get a move like this, the market itself just becomes more elastic. We know volatility has sprung up dramatically in pounds. I would be very mindful of drawing a line in the sand at 121 or 120 with the idea that they've got to bounce back. I think they're awfully cheap, but I think you've got to weigh the idea, again, of setting those targets of both what you expect to get out of it and where you're going to manage it if you're wrong. And realize that this may be the stone cold low, or you may have the opportunity of buying 118s by the end of the week. And if you go into it with that, you could then set some metrics around what you think is realistic. The good news is you're getting back and forth. I mean, we had two big down moves. One about right when London came in, about 1 o'clock Chicago time, 1 in the morning, and another a bounce back, and then another roll over, and we're bouncing back a little bit here. Both of those gave you opportunities for a little bit of two-way action, which is what we're looking for.
Yeah, it's interesting. I couldn't agree with you more. It's so easy to get caught up, even in what we just said the last 5-10 minutes, where it's like, oh, there's all this economic distress now, and there's this environment now where, the U.S. economy seems to be, the numbers as of non-farm last week, the employment numbers, the U.S. numbers seem to continue to confirm a strong U.S. economy with high interest rates in the U.S., which is teaming for a strong U.S. dollar. And now you have a little bit of an unknown with the commodity currencies. You don't have so much of an unknown because they're already starting to kill their interest rates. They're trying to prop up their economy with lower interest rates, and that's the game that they're playing. With some of these developed European economies like the Euro area and the UK, obviously we're looking at the pound market here. We can look at the Euro in a second. It's become a little bit of an unknown here, whereby interest rates are moving higher in their debt markets. And you would think, oh, that translates to a higher currency, but there's this struggle between the economy and the interest rate market there that's creating a potential powder keg, like you say, of volatility, hopefully in both directions. But obviously, it's been to the downside here. But even with all of that being said, the worst thing you can do is now get caught up in the news of it and say to yourself, hey, I'm going to abandon the way that I've been trading for the last weeks, the last months, the last years of my life, and get caught up in this story and get short everything, or I can't buy it. Like, if you're trading from that contrarian standpoint, there have not been so many bounces this last week or so. But if you've had your mechanics where you're taking losses, you're getting in, you're getting out, and doing everything else, then great. If your mechanics have been a longer term trade where you're looking for mean reversion, but you're only buying a little bit, then hopefully you didn't go, full boat into the first sell-off there. And obviously, if you're, I don't even have to speak the other side of it, because if you're trend following, then it's been a pretty good trade, no matter pretty much what you've been doing the last week or so. But the reason I say that, Pete, is because the news and what you and I have to say is always backward looking. And so the worst thing you could do is now change everything because of what you've seen up until now. Because we don't know, the bottom could be this morning. It could be 121 for euro. It could be this drop below 102. They traded 101.80 and they bounced back a little bit here. But the moral of the story is when you're dealing with an unknown like this now, where it's not just a pure interest rate play. And I can remember, and of course, there would be these scenarios where you would be looking at these markets and you'd be saying, man, I'm buying euros here and I'm selling, some kind of euro area interest rate, or I'm buying euros, I'm buying BTPs or something, and nothing is giving here. And it's because it's changed. The last week it has changed here, but that isn't to say that you should change your game forever. Just make sure that you have the mechanics around your game, because volatility, funny enough, is coming out of some of the commodity currency markets. This Aussie not really moving, Canada not really moving, but volatility is very much entering this Eurodollar market.
Yeah, and we're seeing some skew come back out of Canada and Aussie too, where this put skew was so strong to the downside. We're seeing that balance out a little bit. Is that indicative of a bottom? It's coincidental, but
interesting.
You know what? Here's the other thing too, Frankie. This is a normal 2-week start to the year. What I mean by that in the FX world, these 2 weeks we get these. Last year we didn't so much, but typically the first 2 weeks, and this is week 2 of the first full 2 weeks of the year. The first 2 weeks, you tend to get these runs that go really hard one way, turn, go the other way. Now, I don't know if we're in the midst of a turn or not, but we're seeing this very forceful back and forth. Layer on top of that, you've got a new president coming in January 20th. That's a lot of elasticity that's being brought into the marketplace. So and I think you hit on the spot there, don't get caught up that it either paralyzes you or that I don't know what's going on. This is moving so fast. As long as you stay mechanical and make sure that, again, you don't get stuck in the mode of it can't go any lower or can't go any higher. This is going to provide you a lot of opportunity, and that's all we're looking for as directional traders is back and forth. So this is not unusual for this period of time. It's a little bit amplified, but you've got to just accept the opportunity and manage your size and manage your exposure.
Well, and here's your point, Pete. We're back at the daily chart here in Eurodollar, and you're looking at one of the first trading days of the year here, where Eurodollar dumps all the way down to 102.50, close to 102 even. And then in the next 3 trading days here, by Monday of the next week, that's Thursday of the first week of the year, by Monday of last week, Eurodollar is back above 104. Now they're slamming it again. It traded all the way down to 101.90 earlier this morning. Right now or 101.80, sorry. It's bounced back 25 pips to now trade back above 102 here. Are we saying that was the low? I have no clue. But there are some good trades to be had in here. The only thing that maybe you should change is widen out that volatility a little bit. But it's so funny to me, Pete. The one thing that you can always count on is the way that volatility acts. And it's not to say that you can predict volatility, but isn't it so funny that volatility, it clusters? That's really one of its biggest attributes. And we're talking about the last 3 months of the year. Holy smokes, look at all this volatility in the commodity currencies. Like Canada is getting absolutely crushed. And getting into the end of the year, Canada gets dollar CAD gets above 144, and we're like, oh my gosh, is this the next Are we on the precipice here of just a
Right.
totally different trade in dollar CAD? And just like that, the volatility, it doesn't turn off, but it's almost like the rubber band has obviously expanded and snapped, and now it's time for like a new rubber band. And all right, we can't be constantly snapping rubber bands unless there's some crazy like Canadian unemployment is like 15%, and it's a crazy economy. There's something really wrong there, and now the volatility has just completely transferred out of the commodity currencies into these whatever you want to call them, developed, the more major pairs. I don't know what you want to call them, but now the volatility is absolutely in this pound and this euro. And don't forget about the bid that we're seeing now in yen. Because of all this fear, you're starting to see this yen act a little bit like its traditional fear market. And what I mean by that is the dollar yen market has traded from its highs above 158 to now flirting with 157. Those are super high prices, still low prices for yen. But the yen is seeing a little volatility too in its traditional fashion.
And you know what? Dollar yen was never higher last night. So it actually, Friday we had a big rally off of non-farms that was actually sold into.
Yeah, look at that.
And we never got back to those levels at any time, nor did we last night.
Yeah.
So when we talk about a little bit of two-way tape action, and now granted the Bank of Japan came out and drew another one of their imaginary line in the sand, and kind of warned about excessive currency movements, which is almost exclusively at some point ignored and moved through. And
it's like OPEC.
So, but what tells me more is the tape action is that we've had a big run up from sub 150 to above almost 160, and now the tape is telling us that there is a little bit of two-way risk back and forth here. Are we? And you almost, as a trader, you want to see the stop of the one-way action and a little bit of, we call it incongruity in pricing, because this is moving differently than every other FX pair against the dollar. And that is good in my mind, because that says, okay, that's more of an indicator that maybe we're at an upper band of the dollar yen range than just saying it's high. Because you could have said that at 153, 155, 157, and you would have been stuck. So seeing the market perform a little bit differently when everything else is, well, you would expect dollar yen to be higher because euro's so much lower, sterling's so much lower, but we're not seeing that. So whether it's a flight to quality, whether it's just the fact that it had really run tremendously far and fast post-election, you don't assign so much causality as to price action, and the price action is giving you a little bit of two-way back and forth, which means that, okay, so the longs in dollar yen, who've had a nice run here, may be challenged a little bit, which means we get a little bit of play back into this market. And that brings up the question then, is there an interesting extreme in the crosses trade?
Yeah, that's something that we should definitely take a look at tomorrow, because that's a great place to end there, Pete, which is interesting news coming into the trading week here. Obviously, if you're trading FX, there's a lot of stuff moving the markets. But at the end of the day, the price action is really all that you have to follow. If you get held up with all the news, you'll constantly be backward looking. And there might be news, if this, for example, this euro dollar continues its bounce into the U.S. session, the news at the end of the day will be euro sells off and bounces back, and then you'll be backward looking at that. So follow the price action. We'll see how it develops. We'll take a look at the crosses tomorrow. Have a great Monday, everybody. Peace.